Okay, we have a minute till market opens. Um, Still very bullish. We had our change of character on July 30th, and then we've been uptrending since then. Took out this took out this high right here yesterday. Since then, we've been downtrending, even in pre-market, retracing down. Now, I still believe that today we have decent opportunity for taking longs. Reason being is from this impulse move to the upside, so this low to this retracement up here, our 50% range is right here. This is our 50% range. This is our 61.8% range. What I mean is like this is the perfect retracement level for price to return into and then continue in the dominant trend direction. What makes the likelihood of price respecting that 50% and 61.8% range, and I wouldn't rely on a Fibonacci tool if I didn't see a correlating factor, right? Like I need I need more confluences to confirm that price would react heavily at this level. And I have two of them. One is this intermediate low, so basically a 1 hour bullish fair value gap right here, an intermediate low, and then a 1 hour bullish order block right here. So there's a decent chance for price to retrace into that. However, it doesn't have to. We're in a 1 day bullish fair value gap right now. You can see it from this 3 candle sequence. And we're currently in a 4 hour bullish fair value gap as well. Candle 1, candle 2, candle 3. We're in a 4 hour bullish gap. So if I find confirmation somewhere in here, especially in a high liquidity environment like market open, like within the first 5 minutes, I'm open to taking it. I'd want to see us invert a bearish fair value gap, confirming that buyers have taken control. But we're going to have to wait on that, I think. For buy side liquidity, I have this intermediate high mark right here from this 1 hour bearish gap. So let's say I do take longs here. If I can target a 1-to-1 ratio and sell at this level, that would be nice, right? I would just manage my risk accordingly. I'd probably size up in contracts. Let's say if I enter a little closer to this intermediate high, I might just size up. I might do 5 micros, quick little trade, um, and sell at this point, or depending on when we have our confirmation, we also have this 4 hour bearish gap right here. Decent chance in the next coming days before the end of the week for us to just take out this high entirely. So I don't know when it's going to happen, but all I know is right now we are in a bullish confluence. And sure, we have temporary bearish price action, but there's nothing really substantiating that aside from us taking out this liquidity level up here, right? So right now, I think we're just waiting for price to manipulate into our key level, and then we'll look for the distribution leg and confirm when we want to take the trade. I have ES pulled up as well, but yeah, so I mean, we do have somewhat of an S&T divergence. ES has not taken out their version of this August 5th low right here. So we do have somewhat of a bullish S&P divergence, but it's very close to taking out that low. So I'm not too sure. But I would consider this price action right here as our accumulation, of course, happening in pre-market and Asia session and London session. But naturally, every morning the market will want to accumulate price, it will want to manipulate price, and then it will want to distribute price. So let's assume that this is our accumulation leg. Price is now manipulating the sell side, and then we can continue distributing sell side, or we can distribute buy side, right? And I think with my daily bias being bullish, I think there's a decent chance that we manipulate sell side, price, generate liquidity from our bullish confluences, from our intermediate low, from our 50% range, from our 4 hour bullish fair value gap, from a potential 1 hour bullish order block. I want it to generate liquidity from that, manipulating sell side, and then we'll distribute buy side. And then that distribution of buy side will be confirmed by us inverting a low time frame fair value gap. So right now we're just waiting. Price is still just steady downtrending. There's no S&P divergence anymore. ES has also taken out their previous low in this pre-market price action. So right now we're just waiting for price to react, give us a confirmation. Could happen before we sweep this intermediate low. I think that there's a decent chance we do take it out first, but I'll keep my eye open on the low time frames as well, because we're in a very high liquidity environment right now. So I'll resume once we do that. Okay, so Looks like we're about to have our confirmation. We already inverted a 1 minute bearish fair value gap, but that's not the highest time frame that we see it on. We see it on this 2 minute right here. So I need this candle right here to close above the open of the second candle in that sequence. The second that it does, that will kind of give me my confirmation. It's about 117 points times 2, 250. I could probably risk 2 micros and be perfectly okay with that.
Order filled.
So we're going to take that. I think it should be around 500 risk. Yeah, a little bit over, but we're good with that. More than okay with me. What do we want to target? Could target that intermediate right there. I'd be cool with that. Go for a massive risk to reward ratio. The reason I'm comfortable doing that is because there's just a bunch of low resistance liquidity here. There's no confluence that's contradicting our trade right now. Sure, there's a 15-minute bearish fair value gap right here, but it's like, think big picture. We're in a 4-hour bullish gap right now. Right? We had confirmation on a 2-minute inverse fair value gap and a 1 minute with a 5-minute bullish doji candle that looks like that, high resistance. I would say that we don't have to worry about these gaps right here, and then all of this is all low resistance liquidity. I'm not worried about that at all. I think we could very easily take out this high. So now we just wait and see if we do. But what's the ratio on this? Yeah, 2.2 to 1 ratio. Nothing much we can do at that point. I think it's just a waiting game now. Worst case, we lose 550, but I like this trade. Price was very close to taking out that intermediate low. I think that there is still a chance that we do it, but with the resistance and the confirmation that we just had, I think this is more of like a fake out level where it's making retail traders think that we might want to target that, but we don't necessarily have to, especially since this wick already retraced into 50% of this gap, this 4-hour bullish gap. Maybe if it was only into like 25%, I would think we might want to take out more liquidity, but I think that's deep enough. Not only that, when price is so bullish, the deeper the retracement, the less momentum that you have, right? Like, of course, you want a deep retracement to generate liquidity, but if it's too deep, you're thinking about it, you're losing fuel to drive price in the dominant trend direction, which is very clearly bullish. Not only that, what I do like is this is kind of a breaker block territory for us right here. This is kind of a breaker block territory. So the lower we go, we're almost disregarding the strength and the support of this price action right here. Because remember, we had a candle body slam right through these highs, and now we're retracing, rejecting off of this 4-hour bullish gap that ends up falling in line with the resistance, which is now support right here. Just to help you visualize, this was once a resistance, and now it is deemed as support since we had a candle body close above. So it kind of makes sense for why I'd be rejecting at that point. But now let's just, I mean, definitely not adding any contracts. We're going to keep this as is, and hopefully, I mean, let's see. Let's see. I'll resume once we hit TP or hit our stop loss. Simple. I mean, 2.2 to 1 ratio. Perfect setup, perfect TP target, targeting an intermediate high, knowing that this is all low resistance liquidity. The price is going to very easily want to take it out. Had some small pullbacks, but looks like we'll hit the trade within, what is that, within an hour, which is decent, honestly. An hour-long trade, especially in most recent price action we've had this past month, like an hour-long trade for, what is that, 300 points. That's decent. I mean, that's totally understandable. So we're 80% of the way through. You know what that means? We move our stop loss to break even, and the reason why is because what I find is that once price is 80% of the way through, if right, if we end up coming back down to this break even point, all the way down here, chances are that we're just going to flush the whole position entirely. So why not just move my stop to break even? I do that 80% of the way through. A lot of people do 70%, 75. I think 80 is a good amount, right? I'm okay with losing my trade if I'm 70% of the way through and it doesn't hit my TP. But 80% is it's a good level. Um, should hit my TP very soon, hopefully, right? Hopefully. But until then, keep it paused. Okay, so been in the trade for over an hour. I think what's happening right here is we have this order block right here on the 15-minute time frame, and like it's fair that 15 minutes should not supersede a 4-hour confluence, but we've already pushed 250 points, so it's understandable why we would pull back at least a little bit to potentially hit a break-even point. Right now we are in a 15-minute bullish fair value gap, so maybe we reject at this level, maybe not. I changed my break even to minimum 500 profit. So at the very least, if price ends up turning all the way down here, we'll pocket 500. But um, we are resisting off of London highs again and that 15-minute bullish gap, which ends up being an intermediate low for price action right here. So I can see how we could potentially reverse from here and end up taking out these highs. Um, it's a possibility. But yeah, again, that 15-minute order block substantiated by price action right here, price taking out these highs. You have a 15-minute bearish candle, candle body closing within the body of the prior candle and within price here, with clear wick rejection. So I could see price turning all the way to our break-even point. And if that's about to happen, I'm comfortable taking minimum 500, especially since once it breaks that point, because the 15-minute close is in 4 minutes. You have to realize that. If we have a candle body close below this second candle in that gap sequence, we're very easily going to flush. So at that point, why not just pocket the 500 right before uh, we continue downward and potentially hit our entry point? That's kind of my logic there, but if not, we could respect this key level and continue upward. Till then, I'll resume once we hit our 510 or our 1318. Okay, still in the trade. I want to close out the account balance at 53,000. So that would be right around here. If we hit it, that's fine. If not, we're gonna move our stop right here. Reason why, we still have an unfilled 1-minute gap and a 2-minute intermediate right there. Did test it, but in case we want to retrace back into it, quick rejection while staying within the stop loss of the second candle in that sequence, within the open of that. That is a possibility to still continue in the dominant direction. But if not, we end up taking out that low. We'd have pocketed $728, which is still I'm cool with. So I don't know. Uh, I mean, we'll see. Depending on how price reacts here on like a little bit of a higher time frame, I might just close it out early. But because we did have a pullback uh, of because we did have a pullback of 134 points, I would think a 1-to-1 ratio from when that pullback started to where we could go can at least be to this unfilled 4-hour up here. That's what I think, but I'm going to go the halfway point from this level to that, which ends up being 1400. That's kind of my logic. Instead of going for a 2-to-1 on that retracement, I'm looking for a 1.5-to-1, and that would pocket us 1400 on the day. So it's a possibility. I think right now, price could possibly kind of test that 3-minute order block and then continue buy side, but I don't know. Okay, stopped out at the $720 point. Uh Thought we might want to target this 4-hour bearish. Didn't end up doing it, so in reality our stop or our ratio risk to reward was a 1.3 to 1. I'll take it. 720 on the day.